Good morning, I'm Clinton Griffiths. Before this year's crop is even planted, some economists are already predicting this will be another year with margins at or below break even. The House Ag Committee holding a hearing this week entitled Examining the Economic Crisis in Farm Country. Ag Day's Michelle Rook listening in on that hearing. And Michelle, farmers and forecasters alike delivered some tough news to the committee.
That's right, Clinton. Both House Ag Committee members and witnesses at the hearing say U.S. agriculture is on the verge of a farm crisis, as net farm income has dropped nearly 25% from the record high of $198 billion in 2022. They outlined the contributing factors, including lower commodity prices and high input costs, and the need for a new farm bill to provide a safety net.
Thank you, Mr. Chairman.
Witnesses at the House Ag Committee hearing on the farm economy painted a bleak picture for U.S. agriculture.
Since 2022, and excluding government payments, U.S. inflation-adjusted net farm income has fallen by $43 billion, or 26%, to $138 billion in 2025.
Newton also described a tale of two farm economies.
Over the last 3 years, inflation-adjusted net cash farm income for corn and soybean farm families has dropped by 45% to their lowest levels in a decade and a half. Meanwhile, record cattle prices and higher milk prices have contributed to higher levels of income for those farm families.
He says USDA's outlook for farm income in 2025 is slightly better than 2024, but it's only because of government assistance.
When including the ad hoc federal support, U.S. inflation-adjusted net farm income is projected at $180 billion, up 26% from last year. I know firsthand, however, that farmers would rather get their returns from the market.
As such, House Ag Chair G.T. Thompson expressed his urgency for getting the $30 billion of ad hoc and market assistance passed by Congress out to farmers. Witnesses say the economic downturn is partially a result of lower crop prices.
Since crop prices peaked in 2022, they have taken a nosedive. Corn and wheat are down 37%, soybeans down 28%, and cotton down 22%.
But another factor is inflation and input costs, which were at a record level of $462 billion in 2022 and have persisted.
Input costs rose during a period of high commodity prices and have not yet returned to levels to allow family farmers to be profitable.
Witnesses also emphasized the lack of new international markets, and the concern is the trade deficit could continue with a negative impact of tariffs on trade. Chairman Thompson says all this supports his urgency to secure a new farm bill because even crop insurance alone isn't enough of a safety net.
This won't by any means make producers whole, but a bolstered and properly functioning safety net will help them to weather the storm.
I'm Michelle Rook reporting for Ag Day.